Okay, now we are going in more details with the processes of the project risk management. As we can see in this slide, we have to start with plan for risk management or plan risk management process, which is the base for all the following processes later on. So we are just setting ground rules, how we are going to manage the risks in this project. Usually this process is being implemented in our company or our enterprise basically for one time. And for each project later on, we can make some or little changes based on the nature of the project, based on the size of the project, based on different requirements in the project due to different stakeholders, different requirements, different technology maybe, and so on. So, but basically we do this just at the very beginning of our project risk management in the enterprise as the base for most of the projects. Sometimes we have different categories of projects, so we have to set a single risk management plan for each category of those categories of projects we have in our enterprise, if the enterprise is as big as it needs, and so on. So based on planning for risk management, we can start by identifying the potential risks that we have. It may be if you are trying to make identification for potential risks, we can end up with thousands and maybe millions or zillions of potential risks we might have in the project. Maybe as we defined at the very beginning in the previous video, that in this regard, when we are talking about project risk management, we are focusing on the extraordinary risks. So we are not talking about delay of one day or increase in the budget like $1 or $10, but we are talking about non-ordinary because those expected changes in the duration and the cost are expected, and this could be considered by the planner, whatever we are talking about, time planning or cost planning. So we are considering here the risks that have more probability or more impact on the project. That's the risks to be identified in this responsibility regard. After identifying the risks, we have to analyze the risk, as we mentioned, qualitatively and quantitatively. Sometimes we do the qualitative, that's based on the project, based on the severity of the risks, based on the experience with the project, based on the reliability of the collected data or the health of the collected data or the cleanliness of the collected data. So if we have good data, reliable data, and we have severe risks in the project, we can go for quantitative risk analysis, focusing on the impact of those risks in the project on the total risk of the project, especially when we are talking about time risk and cost risk for the whole project. So through quantitative risk analysis, usually we are focusing on the total risk of the project. Basically, number one, as usual, and most of the cases, the cost, the money, and number two, in most of the cases, is the time and the duration of the project. In some projects, we might focus on the quality, we might focus on the scope. Maybe the priority could be different between those four: cost, time, quality, and scope. However, but I'm talking about the regular cases in projects in multiple trades and so on. We have analyzed the risks, make sure that we are still, before executing the project, we have planned for the risk management, we identify the risks, and we analyze the risks that we have, but we didn't start with the execution of the project. Then we have to plan for the responses. We have to plan for the serious risks that we have, how we are going to deal with that if it happened, or from the very beginning. Sometimes we have to consider that from the very beginning, like when we do in our construction industry, like making insurance for the property, for the labor that we have. That could be done at the very beginning of the project, at the early phase of the project, regardless of the injuries or the fatalities we hope we don't have in the project, but we have to make that insurance, sometimes by law, sometimes based on the project management, depends on the country law, depends on the severity of the risk that could be tolerated by the company performing the project. Okay, now we have planned for responses. Now we are going into the execution of the project. In the execution, we have to implement risk responses if we need to implement them. So if the risk response is implemented, then we have to assess the implementation impact on the risk severity and on the risk consequences. If those planned responses are getting the required results, so that's okay. Sometimes those responses does not have the required effect on the project objectives, so we have to find out new responses for the risk. Actually, we have kind of residual risks that we have to consider and we have to control as well. So in the same execution phase, we have to monitor the risks. We have to monitor if the risks are happening or not. If they are not, that's okay, so we can forget them. If they are still in the future, we have to still monitoring them. So in the past risks, so the risk that should happen or might happen in early phases of the project, those are the risks that could be eliminated from our risk register. But those risks is still in the future, still in later phases of the project, we still have to monitor them. And sometimes we have to make kind of reanalyze the severity of that risk. We might go for qualitative assessment, we might go for quantitative assessment. It is based on the changes happening in the project, changes happening in the market, changes happening in the industry, blah, 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 and so on. So we have to consider all of those causes of the projects that we have. And now we have this score sheet related to the degree of risk and suggested action, and the calculated risk or the score of the risk or the severity of the risk that we have. We can see in the red that's between 17 to 25. This is the highest level, and this is by multiplication of the very likely times the very high impact. If this is 5 and this is 5, if this is 5 here and this is 5, multiplying both together, that yields 25. If it is between 4.1, for example, and this is 4.1, so multiply 4.1 times 4.1, it yields something like 17. So this is how we come out with a range between 17 to 25 by multiplying the very likely scale from 4 point whatever, more than 4 up to 5, and more than 4 for the impact up to 5, and so on. The same for the minor severity that we have. This is between 1 up to less than 2 for the probability. The same for the impact from 1 up to less than 2. So the multiplication will be the least 1 by 1, that's 1, and something less than 2 times something less than 2, that's something less than 4. So the maximum here is less than 4. This is the minimum, or this is actually the least severity of risks that we have for this table. So by the end, we have this, for example. Always remember that these are kind of example or examples for the handling of the risks, handling of the qualitative risks that we got. We still, even if we have many numbers in the screen, but we still in the qualitative assessment of the risk. Why you consider this as qualitative? Because this is kind of approximation for the risks. Our target is to find kind of categorization for the risks that we have, like very high risk, medium risk, low risk, and very low risk, and so on. So this is actually our target from this phase or this process of qualitative assessment or qualitative analysis. For example, the very high risk is unacceptable. The same for the high risk is unacceptable. But the medium risk here could be handled somehow. How? By reducing risk or mitigating risk or transferring risk. And actually, this is the most important phase, or these are the most important risks that we are talking about. Here is the category that we have to consider for risk responses. But for the above two, for the very high risk, if risk cannot be reduced, project should not be proceeded. So in some cases, we have to cancel the project if the risk is very, very high. How about high risk? Work must not start until risk has been reduced. Again, we are trying to make kind of reduction or mitigation for the risks, but we cannot start unless we have a solution or we have solutions for this challenge. For the third category here, we can handle that somehow by mitigating or transference. For the low risks, in this case, we can consider reduction measures, but in this case, the risks are less than the risks that we have for the third category. And in many cases, in the very low risks that we have, we might accept those risks and we can go for work. And that's already included in the contingency of the project that the planner has assumed at the very beginning. So again, this is just an example. Remember, this is not a standard. This is just one example showing us how can we handle the assessment, the qualitative assessment of probability, impact on time and cost. The same could be for scope and quality. How can we merge the impact on cost and the impact on time and come up with a score for the risk or severity of the risk, and how to make categorization for the different levels of severity for the risks that we have.